Arista Networks is trading at 108.25 and it's up 87% this past year. And if we look at the chart as a whole, we can see it's been rising really fast since late 2022. And for my December 2026 price projection, I am going to estimate that this stock is going to increase 35% to 145.65 by the end of 2026. And the reason is their current earnings are $2.6 billion a year. I think that's going to increase to $3.5 billion by 2026, which gives us an $11.08 EPS, which is 35% higher than where it trades today. And if we multiply that EPS of 11.08 by a 51 PE, that gives us that 145.65 share price. I'm using a PE of 51 because that's actually the PE that is trading at today. And I think it's going to remain flat throughout this next couple of years just because it's got some downward pressure because it's high, but it also has upward pressure because the industry is expected to almost double over that time. So I think it's going to remain flatlined because of those two reasons. And in terms of other analyst projections, because of the recent stock split, analysts haven't had time to adjust their projections, but the consensus among them all before the stock split was a buy rating, and that's not going to change anything. So they're still a buy. For growth expectations, I put that at a 4 because they have smashed all 4 of their last earnings calls. Their revenue and net income have been great, and they have a growing customer base as well for internal metrics, and they have some heavy hitter clientele, including Microsoft and Meta. For valuation, I put it at 3 because, like I said, I think it's just going to stagnate right around 51. PE 51's high for the tech sector, which is at 37. But it's right in line with its AI peers right now, and that's about average. So like I said, it's a little high, but given the growth in the AI cloud computing space, I think those are going to cancel each other out. Health metrics, I put it at 4. They have a great debt to equity of 0.75. It could be higher. They're not leveraging enough, but it's better than over leveraging. They don't have a dividend, but they have announced earlier this year that they may purchase up to 1.2 billion shares by May 2027, which is a fantastic sign. So in conclusion, overall, the growth prospects are there, and the market cap of 136 billion does leave room for a run. You can double, triple this stock and still, be about half of the major players. The risk, I would say, is medium for this because even though its health metrics are great, it's valued pretty high, like I said before. But I would say the reward is also equally high. It's definitely high because, given the high profile clientele, there's lots of room for growth in this industry. I rate ANET as a buy. So if you're looking for another stock that I like, go check out my video on this quantum computing stock right here.